All right. Well, good morning, everyone. Hope everyone had a great weekend. Great to be here with you today. My name is Scott Thompson, Senior Manager with Schwab Coaching, and my good friend Brett Crowther is in the chat helping out. Big shout out to Eva and Paul and Lawrence and Ray and Ted and Sharon and everybody else, Greg, that's joining us. Appreciate you taking some time out of your busy schedule to join me here today. One of the things that's interesting is you're going through and you have an investing plan. You have rules associated with that plan, one of which is the stop rule that we're going to kind of focus on today. I like to ask myself the question, does moving the stop or adjusting the stop make sense? And that's what we're going to cover today as we go through our open positions. We've got a lot of things to cover, but before we do, let me jump into our important information. Remind everyone that our presentation today is for informational purposes only, not a recommendation of any particular investment or investment strategy. Schwab does not recommend the use of technical analysis as the sole means of investment research. We are using the Paper Money software platform. That is a different platform than the Live Money. There are some significant differences there, so be aware of that. There's no guarantee that the execution of a stop order will be at or near the stop price. We'll be talking about that quite a bit today. Remember, all investing involves risk, including the loss of principal. And as far as an agenda today, what I would really like to try to do is to start off by showing you some resources that are available to you. I have some things written in the description of this webcast already. Many of the things that I'm going to show right now are already posted there. But I want to show you some resources. Then what we're going to take a look at as we had a special type of order on GM that we did last week, and I want to show you how that executed. We'll take a look at a new buy signal today. We have a spot left for kind of maxing out our 20 position order. And then what I want to do is spend the bulk of our time going over all of our open positions as just part of that daily routine. Like, what do I look for? What do we do when we're trying to analyze those different things? You can follow me and Brett on x.com at Scott Thompson CS or at Brett Crowther CS. Love to get some feedback from you there. Also, if you haven't subscribed, please do that. But here we're sitting on the Trader Talks homepage. If you click over here on playlist, this is one of the best places to go. Our playlist is just right here, Stock Investing for Beginners. If you click on the View full playlist, you can see all of the webcasts that we've done. And there's a couple actually little short videos that I've added to this playlist that we review. I posted the link to this 2 green arrow sample buy signal in the chat at the beginning of our webcast. It's also in the link for our description. The other thing that I think is going to be really helpful for you, if you go over to Schwab /coaching/webcast, and I'll chat this in here in the chat as well. But if you go to the live webcast and virtual workshops page, scroll down a little bit and then come over here, click on list. And then this shows the classes that are listed for today. Our class right here, Stock Investing for Beginners, if you click this link on that, you can see that we have a trading journal. I covered this a few weeks ago. There's a trading journal link here that you can download. Then there's some short videos on how to use that trading journal. And so I'll demonstrate a little bit of that today, not a whole lot. But those are the resources that I wanted you to be aware of. Schwab.com/coaching/webcast. And then, of course, our Trader Talks page where you can find the playlists here. Let's jump over into our Thinkorswim page and just give you kind of an update. We are, continuing to do our daily $5 a day, which actually ends up being about $7.24 each trading day that's invested in a ETF that tracks the S&P 500 and the NASDAQ 100. We kind of hit a milestone early last week where we finally got up to about half of a share on the ETFs that we're using in that particular trading plan. Sample plan number 2 is we're investing $50 a week on the first day of the week in the top 10 holdings of the S&P 500 and NASDAQ 100. And we've been, adding shares, just very, very small quantities because it's $5 each one. And I just want to highlight a couple of these, but you can see, we started doing this back on the 9th of June. I did the ones this morning for all 10 of these this morning. And you can kind of see the different variety of prices on Apple. Apple's been going up pretty strong since we started. The first purchase was made about $200, and today we bought it at $232. And, one of the arguments that comes up is, well, why didn't we just buy all of them back here at 200? That'd been a lot better. We'd be making more money. Well, the point is this stock investing for beginners webcast is we're trying to set up some ideas that you can do coming out of high school, coming out of college, where you may not have a lot of money. This is $50 a week, and even this one, that's $200 a month. That may be outside someone's budget. So I just wanted to demonstrate a few ways where you can get started in the investing process. One of the lessons I think that I absolutely wish somebody pounded into me when I first started investing, which was so late in my life. If I'd able to start at 18 or 20 years old, man, how much better off would I have been, is just to invest and start doing something. And that's the objective, or really what we've talked about with these Plan 1 and Plan 2. Now, Plan 3 is a little bit more fun. We've been doing the 2 green arrow. This is a trading plan that I created for our sample investing strategy. The idea here is we're going to be buying stocks in the S&P 100, and we try to buy those when there's 2 green arrows. That's on the 50-period moving average and a MACD histogram, which I'll show you the chart. There's actually a little script link in the description if you want to, copy that charting. It's in the description already, that you can, copy that into your Thinkorswim and load it up. But we've had some trades here. Let me show you our trading journal, just the ones that we've been stopped out of. Now, one of the things that's a little frustrating when you're doing a trading journal, especially if you're just recording the sell orders, we've been stopped out of about 7 different positions here. Intel, we did a little bit of a, we spread it out a little bit, or divided it up trying to stay in that position, and got stopped out. But these are basically all of our stops. The net loss on the things we've been stopped out of here is about $194. And so if you take a look at kind of where these positions are on what's open, we're at 340. So we're net ahead here on the positions, but this doesn't reflect those stop out orders because they're not open positions anymore. But you can kind of see COP, we're losing money on that one. We're making some money on some of the other positions here, but again, the process is fairly simple. And so what I wanted to do is spend the bulk of our time today is going over, number one, just do a review of that GM trade we did last week. We set up a trade where a stock was trading below a resistance level. And the idea was saying, hey, if the stock breaks out, if it trades above a particular level, then I want to buy these shares. And I don't have time to sit and watch the position the whole time. So is there a way to do that? And we set up what's called a buy stop limit order, and that order filled. So let me show you that one real quick. So GM, if you remember, we were there, I think, in class. What day was that? That was at the 11th, I think it was. The 11th, we were in class. We could kind of see the stock was bouncing around this resistance level. I had kind of a high-end resistance line drawn at 54.30. And what we did is we set up a buy stop limit order that said, hey, if that goes above 54.50, then buy the shares for me. And you can kind of see this day right here, it went up to 54.75, and it triggered our order. And this is pretty common. At the end of the day, we got in about 54.50. Let me see if I can find that on our account statement here. Here's our order. So we had a buy stop limit order. There's the buy order right here. 54.50 was our trigger. And we said we don't want to pay more than 55 for it, and we got filled at 54.51, which during the market day on a liquid stock, that's going to be pretty normal. And so this is going to fill there, and it looks like Black Shark is asking if this is the weekly class. Yeah, we do this every week, so every Monday. Thanks for being here. When we got triggered on this, and that activated our stop order. And so, but the point I want to make here is on that particular day, you can actually see the close was below the entry price. And so one of the arguments that people make when they're trying to do these buy stop orders is like, well, I don't want to get in and then be losing money at the end of the day. Look, I've seen, what I would consider like a perfect setup lose money. I've seen what I would consider a perfect entry signal lose money. The fact of the matter is, part of getting into the market is you're going to see the market fluctuate up and down, and you're going to have some risk. And in this case, we got filled at 51.50, or sorry, 54.51, and at the end of the day, it was at 54.16. We were down about 40 cents a share on 9 shares, and at the end of the day, honestly, it looked like it didn't break out, right? It didn't close above that resistance level, but that's what happens. That's one of the risks of doing that buy stop entry. To get in there is sometimes, what we're trying to do is catch the momentum. This is why we do it. It's done what we want it to do. It's broken out and it's gone up nicely. And so, but I do want to point out a few of those kind of nuances of a buy stop limit order. It's very common to get triggered into that trade, be losing money maybe at the end of that first day. And then this could have all the way gone down and hit our stop, and we lost money on a trade that a more conservative trader wouldn't have even traded, right? They would have waited until the close and say, oh, it didn't close above resistance, I'm not buying. Okay, but I did want to show how that filled our stop on that one, sitting at $54 or $50.50 right now. And put this in your notes for just technical analysis. When a stock breaks resistance, it's often that old resistance becomes what? You guys that have been around for a little while, what do you guys know? When a stock breaks resistance, and this is just good information, whether you're a trader or an investor, knowing this. I wish somebody told me this when I started. Knowing that the stock would come back and test that resistance level as the new support is so common that, I used to kind of freak out. I'd be really happy as it was going up, and then I'd start freaking out as it came back down, and I think, oh, do I sell? Do I sell? And the answer to that question is no, not until it hits your stop or hits your exit rules. But just write down in your notes, old resistance may become new support. That's a kind of it's an idea in technical analysis that we've seen play out over and over again. All right, now I wanted to spend a few seconds here. We are going through the S&P 100. That's our watch list. For those of you that are new, welcome. But our watch list is the S&P 100. And if I shrink this down, this is a public watch list that's available. It's the one that we're using, just S&P 100. And we're going through this watch list essentially every single day, looking for the buy signal. And there's actually quite a few stocks in this, in this list that have a buy signal on them right now. I only have open position for one, and so I chose Nike. There's nothing inherently specific or great about Nike. It's not a recommendation, but it is one that has a recent green arrow on the MACD. So what I want to do is kind of review the buy signal. Let's place this order together, and then we're going to spend the rest of the time going through our open positions and talking about those stops and stop adjustments. But so Nike's been trending up here, making some higher highs and higher lows. It's coming off what I would maybe consider a little bit of a short-term similar low here over the last couple of weeks. The moving average is rising strongly. The MACD gave a green arrow on Friday. I was not working on Friday, nor did I take a look at that to maybe buy it here. But some people, now this again, I chose Nike of the 5 or 6 that I saw that had buy signals because I want to talk about some of the nuances of this buy signal and help you to in your process of determining which stocks you want to invest in. So some traders will look at this and say, well, Scott, I have some resistance over here. The last high was up there at 77.50, and I don't want to buy that until it goes above 77.50. Okay, we could do something similar that we did with GM, right? Some traders will look and say, well, obviously, Scott, you're blind because the last high really is up here about $80, and I'm not going to buy it till it goes above there. Okay, so those are some considerations when you're looking at buy signals based on indicators. Our buy signal is really pretty simple. If the stock's above the moving average, we consider that a green arrow, and the green arrows are green until they turn red. So a few days ago, for example, on Nike, with this information that we had in the past, we have some resistance at 77.50. We had a high up there about $80. The MACD was rising, but was still red. If we were doing our daily routine, we would say, oh, I don't have anything to do today on Nike because it's not 2 green arrows. We move the chart forward, and this is at the end of the day on Friday, we have the green arrow. And so this is, again, where your discretion comes in. You have to decide, do I want to act on that green arrow here because the moving average is rising, the stock's generally been uptrending over the intermediate term, we're making some higher lows in the market and arguably some higher highs. Could I buy here? And the answer is yes, you could buy there. I just want to point out that some people may say, well, I'm going to wait till it goes above 77.50, or some may say I'm going to wait till it goes above 80. And that's fine. Here we are today, the stock's trading up there, 77.63, is trading a little bit above my 77.50 resistance line. And again, we're going to go ahead and make the purchase here, but I just wanted to cover some of those ideas. Now, what is the plan? Well, the plan is to invest up to $500 in a position, and we buy on the 2 green arrows, and we set our stop 1% below the moving average. Now, I'm going to put my cursor here vertical, and the moving average value, if you look right up there, that number right there, 69.15 in this case, but on this day, that number's at 71.12. So one of the things I kind of like to do is I sometimes will like to draw out or write out my plan. Okay, so I'm going to put a little text note right here. And so we're going to just buy it at the market, whatever the current market price is when we place this order. But the moving average is at 71.12. So today is the 18th. I like to write the date in. We have 2 green arrows, which is kind of the plan, the sample plan we're following. Again, not a recommendation. And our entry looks like it's going to, let's just call it 77.70 right now. And then we need to say, where's our stop going to be? Well, our stop, again, 71.12. If we take our calculator, so 71.12, the rule is to put the stop 1% below that, times 0.99. So our stop would be at 70.40, okay? So 70.40 is our stop. And in this case, that risk per share, okay? Risk per share is the difference between the entry price and that stop price. In this case, it looks like we're $7.30 of risk. So there's 2 ways that you can position size this. We could say, well, I'm going to buy $500 worth of this stock. So again, if we take our calculator, that's a pretty easy one. We can just say, let's clear this out. We can say I'm going to invest $500, divide by the purchase price, 77.7, and we could get 6 shares. Okay, that's if we do the $500 method, right? $500 divided by the 77.70 equals 6 shares. And so that's probably the easiest method to do. The other method that I've shown that I think is useful to know is like, in addition to having a maximum that we're going to invest per trade, I think it's important for you to decide, how much are you willing to lose on a particular trade or particular investment, because we have 20 of these, right? And so a starting point that people often use is like 0.5%. And we've been using a $10,000 portfolio. So 0.5% of 10,000 is like $50. So how do you calculate that for shares? Well, if we're willing to lose $50 per trade, and then we divide that by the risk per share, which is $7.30, this will give us a number that we can buy, or the number of shares we can trade. So again, let me take our calculator. Let's run that calculation just again for practice. 50 divided by 730, the risk per share, and it says we could do 6 shares. Now, in this case, both of these numbers ended up being 6. That isn't always the case. So, why go through the hassle of this in the first place? Well, here's the reason, okay? One of the things that's very, very challenging for new investors and new traders to do is to actually follow their plan. They have maybe some sound rules, and there's not a holy grail set of rules out there. But, when you plan a trade, the execution of that is very challenging. In my experience, okay, doing this for 20 plus years, in my experience, the reason it becomes challenging for anybody to follow their plan is because they generally risk too much. They are very uncomfortable losing or with the prospect of losing what they're actually putting at risk. So dialing this in, where like, are you really comfortable losing $50 on your next trade? And again, we're kind of operating. I know many of you have been here forever, and you've seen many of my presentations over the years. But if you're new to investing, this prospect of actually losing money, getting stopped out and having a loss is very challenging. And so what I find helpful and what many traders find helpful is to dial in that number. Where is something that's extremely comfortable for you? It's like, hey, if I get stopped out, number one, no skin off my nose. Number two is I'm able to take the next trade. And so hopefully that kind of resonates with you a little bit. But anyway, we have our numbers here. The stop is at 70.40. Our entry price is just going to be whatever we get in here. And let me show you how to place this order. Okay, so I can actually right-click right on my chart, right-click. I can do a buy custom, and we're going to have a stop order. And so that creates this little order ticket for me. I'm going to go ahead and buy this just at the market. The market's open right now. Let's shrink this down so we have some space. I'm going to change this to 6 shares we calculated, right? This little link right here, I don't know if you guys see that right above the quantity, but if you can lock that together, that's a chain link. And now whatever we change on the top changes there on the bottom as well. That's a great idea. And then we change our stop, and we said 70.40, I believe, was our stop price. Is that right? And I need to do better at this, but let me go back to the chart here. We have our note, 70.40 on the stop. And what do I need to do over here? Am I done with this order, or do I need to do something else? Again, this is, as we learn how to do this, it's just good to get in this habit, but stop, good till canceled. If I leave it as a day order, that stop will disappear at the end of the day, and then it won't be in place. So good till canceled on our stop order, and we're going to hit confirm and send. And we just want to verify. It's not confirm. It says confirm and send, not send and send, right? So go take some time to review the order, buy 6 shares, sell 6 at a stop of 7.40. Again, when we have some red notes down here, stop order, no guarantee the execution price will be equal to or near the activation price. We know that. We can kind of check the buying power effect or the cost of the trade and just make sure that's within our $500 parameter, which in this case it is. And we're going to set this in our 2 green arrow group that we've created, and let's send that order off. Uh-oh. Well, maybe I'm out of money. I am out of money. Well, let's do this. This is not a feature available in your live accounts, but it's available. So we can do some trading. If you right-click on any position, you can adjust your cash. Obviously, this is not available in your live accounts, but in paper money, we're going to go ahead and add another 10,000 just so we can continue our process here of buying some shares. So click OK. So I have $10,000 in there, and we'll resend this. We'll redo this Nike order. So let's do that again. Right click, buy custom with stop. And I do see some questions coming through. I'll get to those in a second. And then 70.40 on our stop order. We need to make that good till canceled. Hit confirm and send, review the order. 6 shares, 70.40, $466. Put it in the right group. And no guarantee to get out at the stop or near that stop price, but the order will trigger a market order when it hits that stop price. Send. And so now that should be filling. Okay, so we just got today, and then the thing I like to do is I like to draw a little green oval on the day I buy it. Okay, so we'll put a little green oval there. All right, so there's been some chats here. How do we configure to get an alert on the watch list exactly when the green arrow from the MACD histogram? So in your, you can right click on the chart and you can set an alert, create an alert. You can do that. So you can create an alert. You can do that on a price. You can do it on a study. And so that's how you go ahead and do that. But right click on the chart, create alert, and then you can either set it on price, you can set it on a study, and it'll say like a breakout. But so that's one of the questions that's come through there. Kevin says the ability to adjust cash is like that coming live account soon. I often joke that, yeah, that's a feature they're working on for us. Let's see, just kind of taking a look. RTR had asked, the trade would be stopped out if that occurred again. So not sure what that's referring to, but maybe I'll answer that question as we take the rest of our time today, is I wanted to go through our open positions. So this watch list, this is another thing that's actually really cool. You can go up here where it says current account positions, and you could click on that, and all of your open positions would be on a single watch list, and that makes it really easy to review. Because there are a few positions that are outside of our 2 green arrow plan, I've actually just created a watch list of our holdings. And since we just bought Nike, you can see Nike's not in my symbols. So I'm going to click at the bottom here and just add Nike. And so now Nike's on our list. All right. But what I wanted to do today is just to go through, our holdings here and kind of talk through the process of the daily routine, what I'm looking for, how quickly we can do this. And, as we go through this, one of the things that I think is important to understand is it doesn't take very long. You don't have to spend a lot of time in literally seconds on some of these where, we're done with the analysis. So what I'm going to do is I'll be looking, I'll try to look at the cameras off when I can, but I'm looking over here where the watch list is. Right here, you can see we have our watch list is linked with the number 3, and so is our chart. So, when I click on AMD, it'll show that chart. And then if I arrow down, which is what I'll do on my keyboard, it'll just go from stock to stock, and it's pretty quick. Okay, so I'm going to change my chart time frame to 3 months, just so we're kind of zoomed in on the right side of the chart. And this is what we're looking for. Let me get rid of my cursor here, or the line. All we're looking for when you're doing your daily routine in this particular plan is we're just looking for 2 red arrows, okay, which means the stock's below the moving average and the MACD's red, or we have a new green arrow, which is usually on the MACD, okay? So on AMD, we're looking at the right side of the chart, and I'm going to go through these first couple slow, and then I'm going to go really fast, all right? So AMD, the stock is above the moving average, so that's a green arrow. The MACD is red, obviously. And so the question is do we have anything to do today? So you guys help me out. Okay, do we have anything to do on AMD? Answer, no, we're done. Okay, if I arrow down on my chart and go here to Citigroup, okay, far right side, green arrow on the moving average, MACD still red. Do I have anything to do today? Answer is no. Okay, arrow down. So COF, I have a green arrow on the MACD. I have a green arrow on the moving average. Now, we did get some choppiness over here. We'll deal with some of those in a minute. But right now, as of today, there's nothing to do on COF, COP. Okay, COP, I have a green arrow on the moving average. I have a green arrow on the MACD. Do I have anything to do today? No, we're done. This is how fast it is. You don't have to spend a lot of time. Cisco, Cisco. I have a red arrow on the moving average and a red arrow on Friday. Now, this is life happening sometimes. I was out of the office on Friday. I didn't see this till this morning. So do we have something to do on Cisco? Based on the rules, now those of you that have been around for several weeks with me, help me out here. So number 1, do we have something to do on Cisco? Okay, the answer is yes, we do. What do we do? Well, I have a red arrow on the moving average and I have a red arrow on the MACD. That means I have a stop adjustment signal. And what's the rule? The rule is to move the stop 3% below the low price on that second red arrow day. Now, in this case, the 2 red arrows lined up on the same day. And so that low price that day is what? You guys see what's the low price? I have my cursor on that day. Look at the L value up here at the chart. What's the low price on that particular day? Does everybody see that? Go ahead and chat that in if you see that price. Okay. So 65.86 is the low price there. And so we're going to adjust the stop. All right. So we're going to take our calculator. This is, again, the process. Doesn't take very long, but we still have a process. Okay. So 65.86. 65.86 times 0.97 will give you this new stop price. Okay, 63.88 is our stop. Now, our current stop's down here. You have an order sitting here, and it's $60.69. So how do I move that? Well, I can left click on this little oval and hold it, and I can just drag it up. Now I got a line written there already, and our stop order is supposed to be at 63.88. That's what our calculator told us. So I'm going to edit this order and just type that in, 63.88. And hit confirm and send. Remember that stop's not guaranteed to get filled at that price. It just triggers an order and it could be filled significantly lower. We're already in our 2 green arrow group, and we're going to click send order. Okay, so now I've adjusted the stop. Now, one of the things that I do want to have you do, and this is kind of the whole point of this particular webcast, is ask yourself, does that stop make sense? Okay, you know, this one, in this case, it does, in my opinion. There's our previous support levels right here kind of got broken. If it keeps going down, the point with the stop orders, we don't want to be in the trade anymore. That's kind of the idea behind adjusting the stop, okay? But that now we're done, and we just let that go. Now, some of you may be asking, well, why don't we just why don't we just get out now? Why don't we just get out on the 2 red arrows? Well, you could, but sometimes the stock will dip below that moving average, and then the trend will resume. This is a longer term, intermediate to longer term investing plan. So we're trying to give the stock that was uptrending when we bought it a chance to continue in that trend. If it doesn't, then we'll get stopped out. And in this case, we'll have a little bit of a loss. We bought it over here. You can see my green oval on the purchase. We moved our stop up about $3 above where the original stop was. And, you know, if we get stopped out, we'll still have a loss, but it'll be lower than that $50 that we're putting at risk. Okay. Well, not guaranteed because it could gap over, right? All right. So that's looking at Cisco. Duke. Okay. Duke, same question. Right here, green arrow, red arrow. Do we have anything to do on this one? Nope, we're done. EMR. Now, EMR is kind of interesting. EMR, I talked about this a few weeks ago. This one gapped down on an earnings event, traded below our existing stop, but I changed the stop order so that it was submitted at the last 30 minutes of the trading day, hoping to have this happen where it traded down and rallied back up. And in this case, you know, it's still really not doing all that great, but we're still in the trade and we have our stop there. If it continues to go down, it'll stop us out. All right. Gilead. Now, Gilead's one that we bought last week there on the green arrows. Green arrow on the moving average, green arrow on the MACD. Do we have anything to do today? No. The answer is no, nothing to do. GM's the one we talked about earlier. Green arrow, nothing to do on that one. Johnson & Johnson, this is one we recently purchased as well. Green arrows on the MACD and the moving average. Is there anything to do today? Nope. Okay, 3M. Now, 3M was kind of interesting. We had some red arrows over here. I apologize for that. You know, we got some new buy signals. Now, here's a little nuance about the stop order again that I want to ask you. Once we get a stop adjustment, like I have 2 red arrows on this one from after we purchased it on a diagonal breakout over here back on the 24th. Once I make that stop adjustment, I usually do not worry about making the stop adjustment again until the trend resumes. Okay, let me say that again. Once the stock gives a 2 red arrow situation, like we saw recently there with Cisco, and like we've seen here with 3M, I'm probably not going to worry about adjusting this stop again until the trend resumes. All right, and hopefully it does. If it doesn't, then it's going to stop us out over here. All right, so that's looking at 3M. MS. Now, MS has something interesting here. MS last week gave a new 2 green arrow buy signal. Let's go back over here. You can kind of see the stock was consolidating. It gave a new green arrow buy signal. Now, what's the rule here? When we get 2 green arrows, what's the rule? Well, if we didn't already own the stock, we could buy it here. And if we bought it here, where do we set our stop? Well, 1% below the moving average. Okay, so this is one of those that is kind of interesting, and I'm going to zoom back out a little bit. So this particular day, the 12th of August, we got a new green arrow buy signal, and we purchased it way before that, okay? You can see we have an existing stop order at about $122, and we have a new buy signal here. So the rule says we could adjust our stop. Now I calculated these out, and just for time, I'll just talk through it. The rule says 1% below the moving average. The moving average that day was at 138.48. 1% below that's right here at about 137. Okay. So now here's the important part. This is one of the big takeaways from this webcast today, is we have a stop adjustment rule that's kicked in, and it says to put the stop, in this case, at 137.09, if I did my math right. Okay. So the question is does that stop make sense? Does it make sense to put the stop right there? Well, let's look at why we have a stop order. The stop order is in place to knock us out of the trade if and when the trend changes. So if my last low in the trend, or a recent low in the trend, is lower than where my stop is suggested to be put, okay, and I'm looking at this, Dragonfly Doji, if you know candle theory, but that low price is 136.17. Does it make sense to have a stop at 137.09? Okay, chat this in here. Okay, chat this in. Now, RTR saying too low for my comfort level. Okay, so I understand the sentiment, RTR. I felt exactly the same way when I was first trading, is like, man, that's so far away. Well, number one, it sounds like you have some short-term trader in you, just like I did. Okay, and I do. All right. So this is a different plan. This is an investing plan. This is a intermediate to longer term plan. So there's a couple ways that you can kind of get around that uncomfortable feeling. Number one is just buy fewer shares, right? And we do that at the beginning of the trade by buying, in this case, we only invest up to 5% of that $10,000, and we're only risking about $50. Okay. And so in this particular case, when we're looking at this stop, it does feel far away, especially if you're a shorter term trader. But in this case, having a stop above a recent low really defeats the purpose of a stop order in an investing plan that's longer term to an immediate term. So what many traders and investors will do, is that they'll set the stop below the recent low. And you could go 1 to 3% below that. And I calculated that before. I think I caught the mute button there. But some traders would say 1 to 3% below that low, and that gives us a stop here at this level. And that's at 134.80. So I'm going to move the stop on this to 134.80. So we're just going to left click on this, drag that up to about 134.80. We're going to hit edit and just change this price. Okay, it's good till canceled. Read the red line here. It's not guaranteed to get filled at 134.80. Just going to trigger an order there at that price. Might get filled lower. Hit send order. Now we have a new stop in place. All right. So BLK Sharks asking, where can I learn the rules? If you go to episode 3, I went over all of the trading rules for this plan. So episode 3 is where we reviewed all the different rules for this plan. And then I also, at the beginning of class, posted a little video about the buy signal. That link's also in the description. Okay. All right. Let's take a look here again at our positions. So Nike, we talked about Nike. We bought that one today. NVIDIA, red arrow on the MACD, above the moving average. There's really nothing to do on this one. Pepsi was interesting because we got a new buy signal over here on the 11th. What would we do? Well, we bought it over here. It's trending up, and that's a new adjustment signal. And if I calculated my stop right, it's a 134.61. So again, 1% below the moving average is the rule. We're just going to move that up. And I think it's 134.61, so we'll put that exactly in here. Stop, good till canceled. We know that's not guaranteed to get filled at that particular price. Could be filled lower. We hit send order, and now that stop's been adjusted. SPG, another new buy signal here a few days ago on the 12th. And you could have done these on the 12th. I just, I didn't do them because we kind of meet today. And so I will adjust these during the week sometimes, but I was off most of last week, so I'm just kind of doing this with you guys today. All right. And so new stop adjustment, again, the stop's a 159.33. Our current stop's down here. You would ask, does it make sense to have the stop? And we want to be below these lows probably. So that's pretty close. We had a higher low here and a breakout. So I feel pretty good about that stop. But some people may want to put their stop even below this particular level. So again, we'll move that up. And I don't remember where that was. So that was 159.33. So we're going to edit this. 159.33. Stop good till canceled. Review the order. No guarantees to get filled at that price. Hit send. And now we've adjusted the stop on that one. And target, this one had a green buy signal today. So it looks like the MACD, that could go away by the end of the day. Depends on what the price is doing. This is one of those where it really hasn't trended much since we bought it. So I don't know that I would bother adjusting the stop, but if you wanted to, we had some green arrows over here and you could do that. Again, if the stop rule says 1% below the moving average, but that stop is above maybe a recent low, then some people would put their stop below that level. Okay, and that might be down here, 1 to 3% below that low. Okay, last one I want to look at is WFC. WFC gave some red arrows back here. We adjusted the stop, and this is, like I said, one of those ones where it really hasn't started trending again. And this is just a bunch of noise. Green arrow, red arrow, green arrow, red arrow. And, I don't really adjust the stop anymore on this one. I'm either going to get stopped out of this or the trend will resume. And if it resumes, then we'll start moving the stop up again. Okay. Now, I realize there's a lot of questions. Brett's been doing a great job of answering those. I will go back through. One of the last things I want to show here on our resource page is, when you go take a look at one of the, let me go back to the one we did on the trading journal over here. If I click on that from the watch list and it just starts playing, I'm going to pause that. I'll go down and answer, sometimes we get questions from the survey, sometimes we get questions from the live session, so I'll go in and pull those answers or questions from the chat and just answer them in the descript or the comment section. So, hopefully that's helpful for you. I know we have a lot of questions during the webcast that we can't always get to, but I do go back through and answer them, and I'll post those again today. After the recording becomes available, I'll post those. And so those or today's session again will be available in our Stock Investing for Beginners playlist. And I'll go ahead and chat that into the chat here. And hopefully, today was helpful. Let me just kind of wrap up back on our Thinkorswim screen. We wanted to go over our open positions. We covered almost all of those. The process is fairly simple. If you get a new buy signal, you can adjust the stop based on the rules. Again, not a recommendation, it's just a plan. You can adjust the stop on 2 red arrows. In the future, I'll be talking a little bit more about this, but many people have been asking about taking profits. How can we take some profits on this? I'm working on some ways that we can incorporate stock investing and have maybe a profit-taking component, because I know many of you struggle with that. And so there's been a lot of questions about that in our plan. But what we did today is we went over the resources that were available. We looked at that GM and Nike trade. We adjusted the stops on several of our open positions, and we just are reviewing our daily routine. So hopefully everyone, that's helpful for you. I would encourage you for homework to, either follow this sample investing plan in your paper money and practice. That's what the paper money is really for, is for you to practice and get comfortable with the idea of following some rules, making some of your own trades. And, one of the things that I think professionals do in every arena is they practice. And so I'd encourage you to do that, and hopefully that's helpful for you. Again, remember, everything we've talked about today is just for educational purposes. And hopefully it's been helpful for you today. Great to be with you. Have a great day, everybody. Thank you. We'll see you.